created just a really simple explanation of the transactions that go on behind the scenes on bookkeeping software. So here you've purchased some items. You've purchased consumable inventory such as paint or transfers. So that debits the asset account when you post the receipt, and it credits the bank account or any other payment method you have. But for this example, we'll use the bank account to simplify it. And you've purchased some consumable inventory such as a rags, sandpaper, maybe you bought a chemical stripper or something that it goes into the production of the item, but it's not necessarily easily trackable as an asset, so it's an expense. You buy rags, you start opening the box, it's, you can't return it. So then you've debited that expense and you've credited your bank account again because you've spent money, so the bank account went down. Then you assemble the item, and your assembled inventory asset is the sum of those items that you've put into the asset. So you apply your paint and you apply your rags when you're assembling the item, which we'll get to in Sage. You'll see the process there. And then when you sell the item, someone buys it and you sell it for $50, you have $50 in your bank account. Now the expense, the assembled inventory expense, receives that assembled inventory asset because it goes down by $25, the asset, and the expense goes up by $25. So then when you're calculating your profits, it's your $50 revenue, which is here, less your expense. So the difference being $25 is what your owner's equity balance becomes. So it all balances out. You can see how the colors, I've color coded them just to give you an idea of when it goes in and when it comes out, because the assembled item creates a group of it, and then when you sell it, it comes out of that expense account, it comes out of the asset account and goes into the expense account, because until you sell it, it has a value to your business. So you need to keep it as an asset, not an expense. Some people might perceive once you've painted something, it has no value in the sense that you've put an expense into it, but it's just transferring it from these expense accounts one's an asset, one's an expense, but it puts it into this account, like a holding account in a sense, until it's sold, and then it comes out of that asset and goes into the expense then once it's sold.